Hey everybody, welcome to Mortgage Today for Wednesday, April 24th, 2024, and oh, what a day it was. UMBS opened up down 11 quick basis points. Bonds were weaker in the overnight session on a combination of anxiety over potential Treasury selling in Japan and stronger data in Europe. Comments from an ECB official regarding a one-and-done rate cut in June also added to the pressure. The 8:30 a.m. durable goods data didn't have any meaningful impact on the overnight weakness. Yields were roughly 4 basis points higher to start, and then they were basically 4.7 basis points higher after the data. Rather than chalk the slight increase up to the relative unimportant durables data, it makes more sense to view it as a simple continuation of the overnight trend. The WTMS durable goods orders came in at 2.6 on a 2.5 forecast. Last month was revised from 1.3 to 0.07. Durables excluding defense and aircraft because we're spending tons of money on because we're spending a ton of money on foreign countries to buy that stuff from us. Came in at 0.2 on a 0.2 forecast. Last month was revised from 0.7 to 0.4. New home sales rose 8.8% month over month in March to a seasonally adjusted annual rate of 693,000. This is up 8.3% on a year-over-year basis. The median home price fell 2.2%. The median new home price fell 2% on a year-over-year basis to $430,700. There is an 8.3-month supply of homes for sale. Jamie Dimon, CEO of Chase Bank, is worried about stagflation might return to the U.S. So that is where we have inflation but no real economic growth, which is bad. Bonds were weaker in the overnight session on a combination of anxiety over the potential U.S. Treasuries, Japan, and European data. As we said, domestic session brought actual selling of U.S. Treasuries in the form of 5-year Treasury auction, but the market already knew about that one. The auction was reasonably well received and had no impact on trading levels. Earlier in the morning, durable goods came out right in line with expectations and also had essentially no impact. The overnight weakness was maintained throughout the day, with most of the momentum being sideways near recent high yields. UMBS closed the day down 15 basis points at 99.46. So at a 99.46 puts us still here underneath this very tough Fibonacci ceiling at 99.647. So hopefully we get some bad news to push us above that. If you want some information stuff, check out our sponsor at thatmakesense.com. We have a new video from our series of Yeah But, where we discuss the pros and cons of the coming potential government tax credits. So there's talk about potentially giving $10,000 tax credits to make housing more affordable, but will it really work out that way? So listen at thatmakesense.com and hear both sides of it. We also got some earnings reports from builders. So Pulte reported earnings per share that rose 32% compared to a year ago. Revenues rose 10% to $3.8 billion. Gross margins expanded 50 basis points year over year to 30%. CEO Ryan Marshall said on the earnings conference call, like D.R. Horton, Pulte spent capital buying back stock instead of plowing every cent back into the business. I understand housing is cyclical, but when your ROE is 27%, buying back stock doesn't make sense. One reason the U.S. economy has performed as well as it has despite rising rates and bank lending reluctance is a rise in public debt and equity. In 2008, banks and fund managers each had $12 trillion in assets. Today, bank assets are around $23 trillion, but fund manager assets total $43.5 trillion. This is also why fewer firms are going public, because they can relatively easily access private investment funds.